We saw the market this week hit a 16-month high on increased buying from foreign traders in particular, and then institutional investors also contributing largely to that improved performance. What's your view on the markets at the moment and the activity we're seeing right now?
I think investors are starting to have a sense that maybe the market has probably, put up quite a bit of gains, too quickly into the year. And if you look at the earnings that were reported, I mean, most of them were really within expectations, and there were very few surprises. But if you look, year to date, we were up close to 26%, one of the best performing markets in Africa. If you look at over the last 1 year, we are up 72, 73%. And so investors were really just taking some money off the table.
When it comes to foreign investors, as it is usually the case, we see them indulge pretty heftily in the blue chips because of the liquidity within those stocks. And it's been the case right now as well. With that being the case, I mean, how are local high net worth individuals playing the market at the moment? What exactly are they targeting?
Most of the high networks sort of look at the mid-tier sort of market cap companies, although they do play a little bit on the large caps, but they do look at the small caps and the mid-tier cap counters. And, they played a huge role, especially on the agricultural sector and some of the mid-tier companies, especially the banks. And so, that's where they sort of focus on.
Well, agricultural stocks have been the mirror of the buoyant sentiment we've seen surface on the local bourse, recording impressive rallies over the past month. Just how sustainable do you see this rally being, though, where we know that these are relatively illiquid stocks?
If you look at the soft commodity prices, they've held relatively well, and production has also remained relatively supportive of earnings going forward. But if you look at the agricultural companies, typically they do not pay a substantial dividend. Cash flow-wise, they're not very, very healthy. And so from that perspective, I think we are seeing investors also, being a bit cautious. But I think over the long term, the prices are sustainable. I think also some of the speculative positions being taken, or say based on their breakup value, I think some of them might be a little unfounded, because I don't see, some of the companies really abandoning their core business and, for example, getting into estate development. But obviously, those should be reflected in the value of the securities, and we've seen that upward revaluation coming into the share price.
Well, for now, certainly Kakuzi and Williamson Tea standing out as firm favorites. Mumias Sugar, though, is a stock that sits right beside them. The company's just announced that it's raised power output operations by about 50%. Market reaction to that news?
Mumias Sugar has already gained quite a bit. It's come from lows of about 6 shillings. It's now settled at around 10 shillings. We have a price target of about 13 shillings by the end of this year. Obviously, the increase in electricity production is a big plus for them. In the first half, they had some challenges. Kenyan wasn't able to take the electricity they were producing, and so they had to reduce production. But obviously, this development is quite positive, and should work well for their earnings for the full year ending June.
Of course, an additional positive is the fact that we have seen issues between the company and KPLC to an extent being resolved. Everything smooth now as far as that relationship goes?
Yes, it appears so. Initially, KPLC was not able to take the entire production by Mumias. It appears now that they're actually able to do that, and that's why they're actually operating now at really full capacity on the electricity generation. And obviously, that's very positive news for the market.
Well, Centum Investments, in the meantime, has issued a profit warning, saying that its profit for the year ending March the 31st, 2009 will decline by anything between 70 to 80%. Its shares fell 6.3% to close at 9 shillings 65 at the close of yesterday's trading session. What are some of the major pressure points for this business?
I'm not sure about that profit warning. I know last year they had some problems there with the railway concession, but that was on the 8 or 9 earnings. I haven't got information as to whether the 2009 and 10 earnings would be affected negatively. If you look at the market performance, it appears they've done quite well, or at least relatively okay. I would be quite surprised if that's the case.